Sales tax. So I mean, basically, income tax, that's one set of filings. The income, variety of expenses, you pay tax on that. HST is a separate filing altogether. It's collected in addition to your regular income. So if your services are $100, you're going to charge $113 if you're part of the program. HST is a requirement. So you're required to collect HST from your customer, which would be, again, Foodora and Uber Eats and Skip and all those guys, if your sales in 1 year reaches or exceeds $30,000. That doesn't reset the following year if you were over in year 1. So for example, let's do a 4-year projection. Year 1, you make $28,000 collected income, not after expenses, but you've collected $28,000 from your clients as couriers. You don't have to charge HST, you don't have to register, you don't even have to think about it. That's no problem, you just file your personal income taxes. Year 2, that $30,000 calculation restarts January to December. Let's say you hit $32,000. Well, by the time you hit 30, maybe October, you should register for HST at that point. Then for the other $2,000 for the remainder of the year, you should have charged 13% on that. Now year 3, that doesn't restart the $30,000. You are now part of the program. Even if you make $20,000, you've charged sales tax on the entire $20,000. Once you join the program, you charge it onwards until you ask the government to take you out of the program.
How does that look like from Foodora's end? Are they now paying us extra?
Yes, extra to some degree, yes. So if you're like, today I rode and I'm going to make $200, I charge HST, Foodora knows this, they're supposed to give you $226. Right?
So it's like you saying, okay, you were going to pay me $200, but you also owe me the
HST, so 200 plus tax. Yeah.
And if we don't go to Foodora and say you owe us that HST, then when it comes time to filing our taxes, that HST comes out of actually what they didn't pay us.
What they didn't pay you. So if you should have registered for sales tax. Let's say year 1, $28,000, year 2, $32,000, year 3, $34,000, right? So now you're going up. You're 2 years over 30. At this point, you should have already applied for the program and started collecting. But year 1, you didn't know, right? It was only $2,000. The CRA will often forgive that year. No big deal. It was your first time. It's a very small number. It's not like it was $40,000. So it's only $2,000. Okay, no problem. But year 2, when you make $34,000, if you didn't charge HST on any of that for the whole year, because maybe you're behind in taxes and you didn't realize you even made that kind of money, you're personally liable for that money. No. It's from then onwards. Yes, just those 2 weeks, and then in the following year, it's forever.
So what you're saying is it pays to track your income every single month?
Absolutely. It pays to track everything every day.
If you're about to break it,
yes,
then
you have to
be on the phone to Foodora the same day saying, I'm about to break 30 grand.
Yep, give me a number, and then tell Foodora.
30% on everything I own you.
That's right. Only self-employed income, that's right. So HST, when you have to register, $30,000. That doesn't mean you have to register if you do $10,000 here and you have a full-time regular job that pulls in $40,000. You're not at $30,000. It's $30,000 self-employed income specifically. Okay, it's just on that because you can't charge HST on employment income. It's not possible. So $30,000 self-employed income. Yes, because they're in Canada. If you were to do an online service and deal with someone in the US, there's no sales tax because they're outside of Ontario, specifically outside of Canada. But yeah, these people are in Ontario. Even if you were to go to BC and ride Foodora there, and you have an HST number here, you would be charging the GST there, right? But if you're, to go back to that example, if you're gonna crack 30,000 in the last couple of weeks specifically from tips, who counts tips? Not me. So you might not even crack tips, right?
Tips and cash? No, I don't.
Yeah.
There's no need for them to know.
But also, if you were to do like the standard 20 and then you 31 right at the end of the year, I wouldn't register necessarily unless I knew in year 2 I was going to hit it again. But if year 2 you go back, or year 3 technically, year 1 you do 28, year 2 you do 30, 32, year 3 you do 28 again, and you didn't register, the CRA is not going to bother you because it was only for $2,000, right? But if you stay above 30 in year 2, you have to register for it for sure. That's a good point. If someone refuses to give you HST just because they're not going to build it into their system and you'll just never be able to collect it, you tried, right? You did what you could to collect it. You've called people, you've sent emails, and you've done your job. And if you still can't get it, our government can't hold you accountable for that, right? So we would probably file that under exempt income from HST because it's just non-recoverable. We cannot collect it in any capacity. If you wanted to actually do something about it, you would call the CRA business department and complain to them. You'd say, hey, Uber Eats specifically, or someone else, right, a bigger client, because you're not going to usually do it for the smaller, one-on-one clients anyway. But you're like, these guys are not giving us our HST money. The other companies are. Skip is doing it. Fedora is doing it. These guys are not. They're Uber drivers for taxi services. They get it. Why can't they just move that over to the Uber Eats department?
Is it small business part of the CRA or business part?
Just the business number. So it's 1-800-959-5525. HST should be extension 5. And then 0. That way you get to a person. And that's pretty much HST. And then you can make a complaint. They might transfer your call to like a specific complaint department, but at least that'll get you in the door. You either can go back to Fedora or your clients, if they happen to be somebody else, and ask them for the HST money and beg them for it. They probably won't give it to you, but you could ask. And if they do, perfect. Now you have money to give the government. If they don't, then you're basically going to be paying out of pocket what you should have collected. So you're going to be held liable for that. And that's an additional tax.
You said that they're obliged to give you that money, so
they are, but if
like you're saying there's a timing limit.
I mean, it's not a time limit, but you have to be reasonable. Like, for example, I met with a client yesterday, and they told their subcontractor, different industry altogether, but they told their subcontractor, look, I know we pay you more than $30,000 last year. I have the records. Why aren't you charging us HST? And they didn't answer. They didn't say anything. And they'll get back to them later. So we had a discussion on the other side, so kind of like Fedora's side. What happens? And I said, well, if this person probably hasn't even done their taxes, if they're not even understanding what HST is. And so they may come back to you for 2019 to recoup that HST. They're like, that's fine, no big deal, because we know what it will be. And then they worked for them for 2018 as well. And I was like, they might come back for 18. And I was like, well, if they come back for 18, your business structure was different. Right now, you're all sole proprietors, and they were at the time too. And now they're a corporation, it's basically a different entity. And I would be like, don't give them the 2018 stuff because you've already given it to the government. And that business has since shut down because you've started a new one. So there's kind of a time limit. And then you also have to deal with like big companies being like, well, we're just not going to deal with it, right? Because some of the couriers, not Skip, but I guess Uber Eats, they're not HST savvy. Like they will not give it to their riders and their delivery people. And it doesn't make any sense. They just don't understand how it works.
They're deceptive. They're
Yeah.
a little bit deceptive with it.
They are.
They show that HST is given, sort of.
Yeah.
But it's within.
It's within your normal wages that should be in addition to your wages.
Yeah, and that's
right?
with people who are registered and
Yeah.
not registered. It's
the exact same.
breakdown.
Yeah.
Yeah.
Yeah, so you do have to keep an eye on these guys in particular. I mean, if you're out doing a service-based job and you're like, I'm going to do taxes for this person, I mean, it's just built into your invoice anyway. But with these types of big companies, yeah, you really have to watch them because they're number one, they're not Canadians, right? Like they don't understand as much. They're from other places. Even though pretty much every country has a sales tax. So they should have some concept of the idea of sales tax, but they don't. If you're unfortunate enough, and let's say you have a couple years of taxes to do and it turns out you should have charged sales tax, but now you can't get it, and you're responsible for charging that sales tax, I would not add it on top of your collected income. I would take it out of what you collected and call it part of it. So your income would go down for income tax purposes by the amount of HST you collected, right? Yeah, and you can do that by multiplying the total amount of money you received or your total income by 13 and then divide it by 113, and that'll be your HST within a number. And then, yeah. So that way you're not paying money that you never physically received.
Like DoorDash, I'm doing with
Okay.
DoorDash. And that time I asked them for pay stubs.
Yeah.
Or somebody who wanted that, and they don't have.
They don't have that.
Gets a screenshots from the phone.
Oh, okay. Yeah.
So
I can answer that one. I had to actually get that information. It erases after 6 months.
Oh, yeah, that's not good.
No, and I had to get
It's not
that
good at all.
information from them. I had to actually be very firm.
Mm.
because I was potentially going to be a witness for a union thing.
Yeah.
So I needed that information, and I had to be specific that I needed it for, I said tax purposes, but I had to email them several times and say, no, you have this, you have to have this
Yeah.
for the business.
Yeah, they need those records. They have them somewhere,
Yeah.
right? So, I mean, to that point, it's at the end of the day, taxes and in general, your finances is about being organized, taking those photos, right? Once a month, whatever the longest amount of time you can get for one report is. Maybe it's a weekly report, and you're taking photos every week, screenshots every week, and saving them in a Google Drive folder, Dropbox, or a USB key, whatever you want. But yeah, you have to stay diligent to get on them.
Screenshots are not official, right? They are just telling you every month how much.
True, but I mean, the government doesn't. If you're going to get reviewed, the income side for a self-employed person, which is what we all are, that's less likely to get reviewed. They'll just look at bank statements. They'll be like, oh, here's deposits from Skip, here's deposits from Uber Eats, right? That's kind of how they'll verify that. Like in an industry like mine, I mean, we create invoices. If they want to see sales invoices, they can, but really you can make up a sales invoice any day. You just go on Excel and create an invoice, right? And backdate it to whatever date you need it to be. So, I mean, they don't really check. They'll check bank statements before those screenshots, but the screenshots would just help you, right? Help you stay organized in terms of what you earned. Now, in terms of what else you need to know for HST, HST is filed separately from your income tax. Okay, so there are two different filings that are done around the same time. If you happen to have registered for sales tax, so you're part of the program and you collect it, and you have to give it to the government annually, the reporting looks like sales, what you've collected in total for the year, HST, what HST you collected or sales tax you collected for the year, minus any HST you've spent in your supplies. So the HST on your cell phone bill, on bike parts, the HST on professional services, or anything like that, right? So what you collect minus what you've spent, whatever's left over, that goes to the government. So you're not necessarily always giving them the full amount at each time. That's HST in a nutshell. So basically you track your total income, all your expenses by general category, and then you track your HST by what you collected and what you spent total. That doesn't have to be broken down by category. And I mean, that's pretty much it. No, because you can't prove it. HST is a different department. So if you are self-employed and you collect HST, you are actually submitting your documents to two different locations with the CRA. Personal income tax location, business location, HST. They're two separate ones. HST is a higher probability of being reviewed, specifically if you get an HST refund, because that's possible if your business is generally losing money. But they want to see the receipts specifically every time. And you can't just say, oh, well, I get a meal allowance, I therefore hypothetically would have spent HST within this money. Their argument would probably be something, and this is just what I figure, you didn't actually spend that money. You probably spent a lot less, but you're just using the better of the two options, and so we're not going to credit you HST. Right? But the income tax is different. Number one, remember, income tax is one filing and HST is another. Nothing will get your HST bill down except expenses that have HST in them, HST that you've spent. So pretty much you can almost bank that whatever you collect in sales tax, you're likely going to end up giving it all, or at least 90% of it, to the government. Okay? Writing down HST is very, very difficult because you need a lot of expenses. HST expenses, or expenses with HST in them. Income tax, however, yes, if you have, let's say, collected income of $20,000 and some expenses of $5,000, and now you have $15,000 taxable income. Hypothetically, let's say you have to pay tax on that number. How else can you lower your tax bill? That would be through tuition credits. So if you're in school, you're obviously going to report the tuition you paid on your tax return. That will help save you some money. If you have a dependent, so maybe you have a child or someone or a spouse that isn't working, that's going to help you save money. And then yes, of course, retirement savings contributions, RRSP contributions. That will lower your taxable income. And it's not that you won't pay tax on it. You won't today, but it's a tax deferral system. Just because you're not paying tax on it today means you'll pay tax on it tomorrow when you take it out of your RRSPs at that time. Traditionally at retirement, but you will pay tax on it eventually. You're just not doing it today.
And the difference being that hopefully when we get to retirement, if it ever comes, that we'll need less to live on.
Exactly.
And when you need less to live on, that total income amount is less, meaning you'll pay less taxes on
Yep.
that amount. So by deferring it for another day,
Yep.
you're saving more.
Yes, you can, for sure. And I mean, people say, you know, RRSPs are kind of a rich person's game because if you're making 100,000, RRSPs go farther in terms of saving you money because when you do retire, you might only make 60,000. So you're actually going to save a lot more. Versus someone who makes 30,000 and puts to RRSPs, well, when they retire, they're very much so likely going to make 30 anyway. But it is a tax deferral. But not just for tax sake, it is important to note that the benefit of just having an investment that is hopefully growing 5 to 7% a year, you know, by the time you hit 65 or 70 when you do retire, you'll have something for yourself at that point, right? So it's not just about the taxes for that. Now, if you find that it's not worth putting into RSPs, like if you were to make $20,000 taxable income, probably really not worth it putting money into RRSPs because your tax rate is so low. Sure, your bill might seem a little daunting at $1,000 or $2,000, but in order to bring that $1,000 bill down to zero on a $20,000 income, you'd have to put in a decent amount of RRSPs. And if you don't have $1,000 for a tax bill, you probably don't have $5,000 for an RSP, right? But an alternative investment for people who don't earn, say, $40,000 or more would be something like a tax-free savings account, right? So TFSAs are a great tool to utilize. They have nothing to do with tax. Your contributions, or things that you choose to buy within a TFSA, are after-tax dollars. You've already paid tax on it. But whatever you make within the shelter of that investment, when you go to take it out, has zero tax implications whatsoever. Now, TFSAs, tax-free savings accounts, sounds weird because we mash those words together, but it's a tax-free savings account, not a tax-free savings account. It is not a 1% interest account, and now what's the point of having it? It's an investment vehicle. You can invest in mutual funds, GICs, stocks. I have clients who invested in 420 stocks, made $80,000 last year, tax-free, right? If you had put in Beyond Meat Burger last year, things gone up 600%. Tesla, they say, is on track to be $1 trillion company one day. It's $900 a share right now, but if you buy a couple of those, you'll be all right. So keep in mind that it does not have to be limited to more conservative investments like savings interests. It can be a little bit more risky. Now, if you lose, it has no tax implications. So you just lost your money. But again, if you win big, you'd no pay any tax on it. Okay, so that's TFSA. RSPs could have the exact same investment as a TFSA, but when you're ready to take the money out, you have to pay tax on that.
Hey guys, I hope you really enjoyed the video. And if you haven't already seen last week's, click on the video below and watch it now. Thanks for watching.